Are you tired of jumping from one strategy to another without seeing results? My name is Loaded Forex, aka No Signal No Entry. In today's video, I will review the best trading strategy ever, which I call Trendline trading strategy. A simple, powerful trading system every Forex beginner must know. Whether you are new to trading or you are still unprofitable, mastering this strategy can help you to identify high probability setups. It will help you to reduce losses and trade with confidence. Make sure you stay tuned to the end, because this one strategy I want to show you in this video could change your trading journey forever. If that sounds good, don't forget to click the like, subscribe, and turn on the notification bell for more powerful Forex trading tips designed for beginners and aspiring Forex traders. For the past few weeks, I've been getting a lot of messages whereby traders are asking me how they can draw trend line like a professional trader, the proper way to establish their trend line in the chart, right? And what I'm about to do in this video is to show you the proper way to establish your trend line in the market and how you can use it to take a quality setup in the market. And one thing I want you to understand, there are no specific way to establish your trend line in the market, but I'm going to show you a proper way that is working for me, that I've been using for years right now. And I'm also going to show you other ways that you can also use to establish your trend line in the market. The first approach I'm going to show you is how you can connect your trend line from week to week. At the top of the candlestick, if you are establishing a down trend line, right, you are going to see what we call shadow, or you call it wick, at the top of the candlesticks. If you are using a down trend line, you can connect your trend line from the point A, wick rejection at the top of the candlestick, to another point B, wick rejection at the top of the candlesticks. Then you extend it to the fissure, right? So if you look at what happened here, price tested this trend line here, then retested it second time, right? Then third time, what happened? Price almost tested the trend line. It was unable to touch the trend line, and you can see the big moves to the downside. Major sell opportunity. You could have missed this kind of opportunity, right? And the second way you can also connect your trend line or establish your trend line in the market is by using the body of the candlesticks. You know, you can see the body here by connecting the trend to the other body of the candlestick. I have my point A here by using the body of the candlestick, and I also have my point B here by using the body of the candlestick, then extend it to the fissure. You can also see that the price action also failed to mitigate it the third time. The third step I'm going to show you right now is how you can use your trend line as a zone in the market. I love using my trend line as a zone, but sometimes trend line can also serve as support and also resistance, depending on what you are doing in the market. If there's any specific challenge you are facing in your trading journey, whether it's understanding a strategy, managing risk, or you want to learn how to read candlestick patterns like a pro, or even building a trading psychology, let us know in the comment section and we will make sure to cover it in the future content. The trading tool I love to use is what I called parallel channel. Parallel channel tool helps me to establish my trend line as a zone in the market. I love to connect both the wick and the body of the candlestick, right? I love to cover the two sides, right? So I'm using my parallel channel tool by connecting it from here, then cover the body and extend it to the fissure to see what we are talking about. Now, if you look at it right now, you can see the price action tested it here, retested it again, and you can see that the candlestick mitigated the trend line. When the price action mitigated the trend line the third time, what happened? It tapped me in to take these major sells to the downside. If you use your trend line as a zone, it will help you to catch every opportunity in the market. As a day trader, there are two time frames you should always use if you are using this trend line trading strategy to execute a plus setup in the market. The first one that I love to use all the time is 4 hours time frame. I call it 4H time frame. Let me use TF to represent the time frame. And the second one is 15-minute time frame. The work of the 4 hours time frame is to help me establish my trend. Where is the price action heading to on the 4 hours time frame? Then the 15-minute time frame, I use it for my entry. If you look at what is happening right now on the 4 hours time frame, you can see that the price action has been trending down by creating this major swing lower low, major swing lower high, then major swing lower low, then major swing lower high, and another major swing lower low. That shows that the overall trend on 4 hours time frame is bearish. That means I should be looking for only sell opportunity in the market. I don't have any business with buy setup. I'm not saying you should not buy in a downtrend market, but I love to trade with the trend. I love executing my A plus setup along with the trend or with the ruler of the market. So I'm going to exercise a lot of patience and wait for price action to buy and mitigate this downtrend line the fourth time so that I can execute my sell position. This is the most difficult part of trading, the waiting time, patience to wait. It can take hours, it can take days, but you need to wait. If you can wait, you will make a lot of money. The principle of market, it always rewards patient trader. Market will take money from impatient trader and give it to a patient trader who can exercise a lot of patience to wait for the price action to come to his or her zone and execute without hesitation. Now let's see what the price action will offer us on this trade. We just have to exercise a lot of patience. Finally, the price action mitigates our POI the fourth time. Now is the time to scale down to the entry time frame, which is the 15-minute time frame, to execute our position on 15-minute time frame. If you are still finding it difficult to achieve consistent profit in your trading journey, this is the perfect time to take action now. We have created a free community on Telegram where you will get access to valuable trading insights, weekly profitable signals, and step-by-step guidance to help you avoid common mistakes most beginner traders make. It doesn't cost you anything to join. Just click the link below this video description and become part of a successful and supportive trading community that is focused on helping you to grow and finally see consistent results. The next step is to scale down to 15-minute time frame for execution. On the 15-minute time frame, I love to use counter trend line. It protects me from entering the wrong setup in the market. So I love to draw another counter trend line against the major downtrend because I have point A then to point B. Then I establish another inner counter trend line by connecting it from this point A to point B. After establishing this CTB on 15-minute time frame, I will exercise a lot of patience because patience is very, very important if you want to make money in trading. I want to wait and see a bearish candlestick to break this counter trend line before I execute my position. And let's see whether the sellers will eventually break the counter trend to the downside. Finally, we have our first major breakout. The sellers close below this counter trend line with a bearish candle stick. Now I'm using sell position, place my stop loss above here. Then I'm targeting the next major swing support level as my take profit. Let's do this breakdown. Let's assume you are trading $100,000 profit account and you are risking 1% on this trade. Then probably we are risking 55 pips on this setup. Then we are targeting how many pips? We are targeting 200 pips. That's like ratio 1 to, if you look at the risk to reward, you can see risk to reward ratio 3.66. That means we are risking 1 to make 3. That is 3 risks to reward. So our stop loss is 55 pips. Then let's press calculate button. So the amount at risk is $1,000. So if this trade goes in our direction, we'll be making $3,000. So 1% of $100,000 profit account is $1,000. So that means at the end of this trade, we'll be making $3,000. This is the part where you need to apply patience and allow your trade prediction to go in your direction. If you look at the price action right now, it's already at the second counter trend line and price broke it, then mitigate our TP level. All right, guys, that is the end of today's episode. If this video has added value to your trading journey, inspired you, or blessed you in one way or the other, we would truly appreciate your support for the channel. The best way to do that is by simply clicking the like, subscribe, and turn on the notification button, which tells YouTube this content is helpful and pushes it out to more traders who might need it. Also, don't forget to stay connected with us and continue receiving practical tips, strategy, and insight that can make a real difference in your trading journey. Your engagement goes a long way in keeping this channel alive and allow us to keep creating valuable content for you and other traders around the world.